Hello, everyone. Welcome back to the RationalInvestor.com's Broiler Chicken Show. Back. Oh, the website's down right now. Oh, boo. Hello, everyone.
Hey, look at that.
Welcome
We're
back
live
to
on YouTube.
the
That's good to hear.
RationalInvestor.com's
We'll put the mute on there, so at least we're not redundant. Actually, I tried to teach a class the other day, and I didn't even know that the website was down, and I went to grab resources, and I was like, oh no. So I'd start the class like 20 minutes late, totally flustered. Fantastic analogy of this market state. First time in 7 years I've been teaching this class. I officially told the class yesterday that was my worst class ever. But actually people were still pretty happy. So I think I got the information across. We had a lot of fun yesterday with the level 3ers looking at the DOM and how we can use the DOM and price behavior of the DOM and profiles in the order book to help us trade, and then of course different types of orders that retail versus institutional players use, and different tools that you can use to measure that. Good old tensor chart, people. But having said that, a little bit flustered right now. If I understand correctly, we got one hell of a team working with Stewart. I think it must be up to at least a half a dozen people he's got working away on this team now. And they are in the midst of some major overhaul or something along those lines. So as a result, they took things down. And you just got to roll with the punches in this kind of day. And this is a bit of a danger to all you. Just a warning to you. This is a danger of going down these website-based businesses. This is a black hole. There's no escaping it now. It drives you crazy, but oh well, it is what it is. So I had to do a little bit of ad-libbing. Current level 3ers should have things in the site and the school page back up and running for Wednesday, and hopefully Brian has his head on straight. And Daniele, if you're listening, and of course I'll be harassing you tomorrow and Tuesday, if you feel like coming in and chatting a little bit with the class on Wednesday. Actually, a pretty good dovetail sales pitch for your program. The day traders, we run this room on the site, the Battle Stations room. And the day traders, they themselves have a little mini course that they teach on how to understand order flow and market profile and footprint and stuff. So a really good dovetail with the material that the level 3ers just covered on Saturday. So Daniele, expect Brian to ask you to come in and chat with them on Wednesday. Level 1ers, of course, just finished their final sort of learning module here today. Next week will be a review week, and it's a mountain of material, so trust me, a week alone is not enough to give all of the information proper due, but nonetheless, get you all ready for your exams. Level 1s, learning how to work with a trading plan, and actually really, ironically enough, most of level 1 is just learning how to manage yourself. And slow yourself down, understand how professionals approach this business of risking money in the marketplace, and setting yourself up for success. So I did hear at the end of class today, Grim really hit home. I mean, just listen to what he said there, the last 5 minutes of class, and just do exactly that, and you'll do perfectly fine on the exam, and that sets you up for success to run your own, small business of trading for the rest of your lives. So today, these Sunday classes are primarily geared towards kind of just being a dovetail for the level 1ers, just in case, because keep in mind, this is a ton of material that we're asking people to try and learn in a very short period of time. So Grim did his offering, and I just waited politely for them to finish, and then as soon as they're done, I threw this up. And I also suggest to the current level oneers, if there's any questions that you might want to just get Brian's input onto, that maybe Grim didn't feel comfortable answering for one reason or another. We'll put together a nice little document here, so we got a whole bunch of questions they want to ask me as well. So we'll see how it goes. As well, too, I do enjoy throwing in my own personal rhetoric. We'll say that, unfortunately, we're in such an odd... The problem is I can't really use the dashboard. I wouldn't mind showing you breadth and stuff like that. It's just the data is just a mess right now, so unfortunately it's just not usable. I suppose we can just talk off of these simple charts that I talked to you guys about with... where's it? I guess it's this one, hey? You look at something like the stock market, and anybody, if you go to Mrs. Green's grade 2 physics class, if there is such a thing, what goes up must come down. At some point, this is not healthy, sustainable price action. It's a bit scary, really. And unfortunately, I kind of thought that this was going to happen as we go through the crisis. In this particular case, it's a health crisis. It could very easily deteriorate into civil war and then outright global war. I get the impression that this actual part of the century-long cycle, the years that end in 20s, right through to probably the about maybe halfway, 3/4 of the way through the years that end in 40s. These are usually very, very difficult times for sort of human rights and individuals' rights and freedoms. Versus, I think that the period that ends in 70s and 80s and 90s is actually a really easy time in society, and it's sort of the end of the century, and people are usually feeling optimistic and enthusiastic into the end of the century. I gotta tell you, watching my entire life play out here, it sure feels like that. I can tell you, there's a very different tone in the world I've noticed since, really, I would say since the 2008 financial crisis. And you might even see it in price action where, things were just sort of bumping along, doing their thing. And then something significantly changed, dramatically changed through here. You can see it in the price action. Not really sustainable over time. Anybody should look at that, and that should give them willies. What goes up, what must come down, that kind of thing. And the sad part about it is this, I don't know, who knows how the hell this has to end. You could argue if we go back 100 years, and I like to do this with you guys, and, sort of look at that Great Depression scenario. I hope we don't have to end this cycle that way, but I think it's definitely possible. So, and the problem is that's the backdrop of all these conversations now with you guys. This is gonna be tough, man. It's gonna be a tough time. This is, I think, my 1930s scenario. Yeah. So, I don't know. Are we getting ready for this? And we've just got to grind our way forward for the next 10, 15 years as they inflate our economy. I suppose that's if the bankers get away with what they want to get away with, then so be it. Reflating the economy, etc. Or are we in this kind of stage and we're just going through the blow off top, and then they're going to bring the whole damn thing right back down to square one and undo all of this US dollar hegemony nonsense, and we go back to sort of some hard currency world, and the economy has to do something along these lines. Oh goodness. And the interesting thing is I wasn't alive back in the 20s, the 30s, the 40s. It's so hard to really learn economics 101 what daily life was like back then, but I really think that that's our similar scenario. I mean, the interesting thing is that usually the most uncomfortable trade is the writer trade. And I think it's actually easier and it's more comfortable to think that we're in this kind of scenario and it's the end of the world and all the hell's going to break loose. And it's actually harder to envision that we're going to actually go through some sort of insane growth phase here. I don't know. I mean, according to my economic theories and everything that I've done and through my past 30 some odd years work in the marketplace says that we're going through this here. That's what our future looks like. So the problem here is that this is sort of like stable asset. And if we alter the current asset that we use to measure that, I think there's a lot of similarities. Looks like I lost my charts. That sucks, man. I used to have all these really cool charts all drawn up. Anyway, so you can kind of see how the 1930s, that's this little image here, looks very similar. There's the dot-com boom. There's the Great Depression scenario. But the irony of it all is that this is taking quantitative easing out of the equation. In reality, of course, this is what we've done. Just gone screaming to new highs here. I don't think our society, I don't think anybody's buying the con job that society is really this great and it's so awesome. I don't think anybody's buying it. I think actually the public is quite comfortable with the idea now that the currency is worthless and is being diluted to make the banksters happy. So, serve their purposes. I think the public understands that. I don't think there's really anything we can do about it, which is sad. I do know that because of this, because I keep seeing this over and over and over and over, my attitude, to be perfectly frank with you, I'm a little bit disillusioned by my generation. And as a result, since what has happened here, maybe the best way to show you, let's see if I can do it this way. Yeah. I think that this is what happens. The only problem, of course, is that this is in the adjusted number. I mean, what does the number in real terms look like? I mean, I think we're here, and I think this is what has to happen in front of us. I mean, is there some sort of massive deflation, and they can somehow take the money supply out of the market so this image can happen? I don't think so, but who knows? Only time will tell. So as a result, to me, this looks blatantly similar. And I've been studying this so long, I have personally become a little bit disillusioned by the Western capitalist machine. And more importantly, by the complete lack of regard for society and for the social fabric of society by the capitalists, Rothschilds, those kind of people. They don't really care about any of that kind of stuff. You know me, I'm all PMA for the win. Let's all try and help each other out. I lost my wife to mental illness, so, material wealth doesn't really make that big of a difference. Even if she was stinking wealthy, people said that she probably still would have committed suicide because it was, mental health issues, not monetary issues. So, in a weird sort of way, I think my attitude has slightly changed over the past few years because I've really had my eyes open to how blatantly obvious this manipulation is. And it sucks. I even told somebody today, and they even said, I bet $5 you're going to use this conversation and that we're having here today as a reference point. And I said, yep, you're absolutely right. In that they've noticed that my attitude's gotten a bit salty lately. So, it's a little disappointing. I'd love to be able to be Mr. Happy-Go-Lucky and Mr. PMA for the win and not give a fuck. But I'm just... No, that's not the right word. Not give a fuck. But just be happy and content and stuff like that. But just seeing how blatantly, brutally blatant all this is, that's what's turned me so salty lately. So my apologies on that regard. I think the audience that's put up with sort of my crazy rants and over the top nonsense and swearing and stuff. Cut Brian a little bit of slack. I mean, Brian's pretty stressed out about what he's literally watching in front of his eyes, the whole societal fabric of 50 years of ideology being rammed down my throat, just being thrown out the window and on a whim, just to satisfy some sort of external masters, it seems. And the whole idea of citizenship within my country is actually kind of it's not really playing out the way that you would think citizens would have control over their country. Somebody else is in control here, and it's darn frustrating. I'll tell you that much. Very, very frustrating. So, like I said, a bit of apology, probably, you don't really need that. It's not really healthy. If I'm doing my job to try and teach you, 30 years experience, try not to do this. Try and do more of that kind of thing. That's really what you're here to learn, not some crazy old man's bitching that it turns out that the Muslims were right. This is hell. Oh, great. Wonderful. Anyway. So, with that said, probably my number one piece of advice to all of the level oneers right now is, if anything, for some reason, the good Lord gave you this gift where you actually popped into TRI. I mean, how ironic, eh? They, 12 weeks ago is when they started their adventure. So this is a weekly chart. Let's go back 12 weeks. What did the world look like 12 weeks ago? So can you imagine these people actually... Oh, look at that. It's almost exactly right after the Coinbase IPO. So these people came to TRI and said, hey, Brian, can you kind of teach us how to trade, or, the community? Not necessarily Brian himself. And then the first thing we tell you to do is just put your money away. Just put your money away, right? Can somebody attest to that? Are there any level oneers here in the hangout with me here? Did we not tell you just to put your money away? Oh, good, Rachel. Actually, Rachel, I think you're going to... I get the impression Rachel's like a class valedictorian kind of thing. Anyway, the point here is, gee whiz, if you just followed that advice, wow, you sure saved yourself a big headache. The problem with that, of course, is that's cherry picking. I mean, it's coincidental. And I guess the point of all of this is, I got sort of publicly cross at old students for sort of saying TA didn't matter and all that kind of stuff on the way up here. God bless your soul. We're all out here to try and make money. And the good part about Bitcoin, I mean, this is the most beautiful part about Bitcoin, because now this is like the third wave of this I've been through, is Bitcoin is stunningly forgiving. You could, even if you sat here and waited like 5-10 years, the price is going to be higher because of this built-in halvening mechanism. The only problem with that is that it does inherently produce these very, very wild swings in price. And, what you just have to learn if you are here to make money from trading, and who knows if you are, maybe you are, maybe you aren't. I mean, the irony of it all is if you're just a Bitcoin enthusiast, you just want to come along and just nibble. You'll do fine over time. I gotta sneeze. Hold on a second. Got 3. That's not bad. Like I said, even the people that came in and chased Bitcoin here back in 2000, by the time the market had finally washed itself out and started to put in bottoms, most of those people had sort of gone away and sort of, well, I guess I'm not a professional trader after all. I'm sitting here bag holding from the top and I don't know what to do. If they didn't sell and give up, well, congratulations. At least you held on. Hopefully it took, a small amount of risk through here so it wasn't too painful. And, if you want something... actually, we have one gentleman on the free YouTube feed. I always forget his name. Great Del Moody? Is that his name? Great Del Moody? I think that's his name. Wrote like a total user's manual. You know what? Here's a compliment to you, dude. Some of the site members were actually going on YouTube, finding your document, and posting it in the lounge going, geez, this stuff's gold. Everybody should have it. So that's totally awesome. But here's another one. If you're not familiar with it, usually they say that bear markets last about a year and a half, 18 months. That's usually the benchmark. So ironically enough, if we just go 18 times how many years? Like 4 weeks in a month. So roughly 72 weeks. Is that right? 18 months, 72 weeks. Sounds about right. Something like that. Where does that take us? That's not bad. That's actually a really typical bear market. It's really not that out of the ordinary. And here's the kick in the pants. Is ironically enough, I think you could make the argument that really as of about here, I think actually the market just kind of went sideways for a year or two. Well, it's just basically up, down. I mean, there's Kavarkinator's buy there. Man, he's going to be a legend for that buy. So beautiful. I remember that Crypto Cobain guy. He was coming in here going, that's it. This is the line in the sand. She shall go no lower. Gotta admit, that guy's a fucking boss. So, the pros are coming in here. I remember we did that funny little show with Da Vinci years ago down in here. And we were kind of like, the odds of it coming back to the 50% rule is probably pretty good, So, sure enough, there's that. I was taught by one gentleman. It was sort of a reminder. And we often make a joke out of it. And I had immense respect for it because I hadn't used that setup in years when I was doing it with him. But we had one site member who came on, and we affectionately called this trendline breakout setup the Ron Jeremy. But I tell you, you get a trend line, 1, 2, 3, it breaks it, and you get a W on the other side of it. Look out. I mean, seriously. Great Del Moody guy. That's all you need to know. It's really that simple. And, hopefully, it sucks now reporting on this because, are we in a bull? Great Del Moody will tell you that if you ever see the market smiling at you, what would the Great Del Moody say? If you ever see the market smiling at you, what does that mean? Uh-oh. And unfortunately, if you look at that and you go, oh boy, that's kind of nasty. So what do we mean by smiling? Something like that. It's a smile. So, try to, that image right there, you should be able to take it. The only thing that's actually problematic with this image is the volume is all wrong. This volume actually is very suspicious. And the problem here, of course, is that I believe that this bull market was artificial. It wasn't real. It was a bull market all around this big public IPO event that Wall Street wanted to cash in on. So, actually everybody just took the level 1 course. Can you see how the bulls are not really that active here? This should have been a little warning to you that, hey, there's something not right here. If this was really a rip-roaring bull, like, if we go back in time, we go back, last cycle, like in here, right? You notice, where are we here? Yeah. So, volume's fairly healthy. It's huge buy signal right there. But as we start going higher and higher, Do we get up top there? Well, actually, I guess same sort of thing. Kind of a bit of a divergence. Notice how we're just not making higher highs in volume. So that's going to be a little bit of a warning, right? Like that bar there, that was 144,000. But this bar all the way up at 20,000, that was 131,000. And keep in mind, this is a weekly price chart. So you can kind of see the divergence. Now, that's a buy signal. Big ass fucking volume breakout. And of course, look at what happened here. Right, down, up, down, breakout. And who can tell me what was this fundamental event? So actually, this is a really good example of a liquidity event. What happened right here? Does anybody remember? What was this event? Especially you level oneers, right in there. And really, the volume pattern itself was the tell. Oh my goodness. It was one auction. There was an auction here, but there was also another one here. This was the second Silk Road auction. And actually, this is interesting because actually, I think that the price action that Bitcoin did here following this bottom is actually the parallel analogy that I use with what Ethereum just did and what I think Ethereum's going to do. That's kind of a funny thesis. Anyway, so the point here is as the market's moving higher and as we were, as long as we kept making higher highs in volume, okay, everything's fine. I mean, this is a huge buy. And then notice, wait a minute, there's something not right here. And then actually the selling bars start accelerating and it just keeps going and going. And at this point, you got to kind of go, there's something not right with this story. Maybe I'll just cool my jets. Right? Like our volume impetus signal we teach the kids on the site is down, up, down, breakout. So actually the breakout in bulls is right in here. So that's all through this. Once we get up here, like I said, we're actually making lower highs. And then these darn bears, they just keep waking up and getting stronger and stronger. So, point here is, I think you could make the argument volume was ramping. We got a nice double bottom on volume bar right there. I think that was Kevin's buy level right there. But then really, ironically enough, this whole run up here is actually on lower and lower. Mind you, they did some pretty good volume in that candle there. So that wasn't so bad. But here, oh my goodness. And especially all up in here. Oh, yeah, where the hell are the buyers? Very suspicious. Very, very suspicious. Now, one thing I will say that I really do like now, it seems to be developing more and more, is something along these lines. And if anything, to kind of maybe mark the end of this correction, maybe we see some, buyers start to step in. But notice, like this is what I don't know whether it's what's going to happen. It sure is what I'd like to see happen. It's sort of like this is 2013, the run up into the new, the spring, April, May. This was really violent. And like I said, I think that's what Ethereum's doing right now. And then we kind of just sort of settled down. And then notice there's some pretty nice volume here about the middle of July. That sort of marked your pivot, and actually you can see what we did into the end of the year. So, that's interesting. July, and where are we now? I wonder. So this is actually, I'd like to see this kind of price action in here. Kind of heading down, everybody's all negative, really bearish. Here we are, middle of July. Can I please get some sort of bottom in here? And the interesting thing is I think it's going to be like this, where the bottom is not really friendly. It's like down, up, and then it's going to be like slight pullback. And then notice they're like higher highs. So everybody's going to be like, oh yeah, if this thing reload zones here, I'm totally going to buy it. And it just fucking never does. I've always seen that happen. Drives you crazy. And what you have to do, and it's a pain in the butt, and like in this event, what happened was into the fall, you had the actual case, the Silk Road reversal low right there. That was your reload zone. And it happened in a heartbeat, and this was a massive down event. Right, everybody's selling. Oh, give me up, panic sell, it's over, it's over. You had to step in and buy into that? Oh boy. Well, if you did, woo! So that's actually what I think is going to happen here. Something along those lines. This ain't going to be easy, folks. No doubt about it. But what the hell? This is where we always say it's really handy if you don't want to try and like outsmart the market and outtime the market. On your bigger sort of picture, you draw your reload zones and you start getting the rule that I have, and I used it all the time with my retail client base when I was a broker, is we're not allowed to buy until we are at or below reload zones. And, if you had just nibbled away all through here, and then, of course, there's your Silk Road reversal, right? Nibbled even some more there if you felt like it. Well, you got yourself in on a pretty good trade. So that's actually what I kind of think's going to happen here. We'll see how it goes. It's just, my opinion. So fucking what? Kind of that similar, dumping. I like the idea. Maybe one more dump. Maybe that is the low. I don't know. I would like to see one more dump. Really break some hearts. Then straight back up. Then that kind of thing. And then a woohoo. Away we go. We're not getting that big volume push, though. And usually what happens, right, is to actually bring the volume out, you got to get a big down red candle like this one brings the volume out. And then the next candle, the buyers come in and just buy up the other side of it. Kind of like this, right? Big red candle, then buyers come out, next candle, and just buy up that next candle. And then up we go. So it's not really the prettiest looking bottoming chart. If anything, what sucks about this is you change this to a line and, oh, hey, where'd our W's go? So there just really isn't a hell of a lot to work with here. And also, too, kind of maybe my sort of salty discord of late is, I see this chart. I'm tickled pink at those people that did decide to take our education program, and the very first thing we said is just put your money away and learn the process. And I'm sure they're looking at this going, well, I think I was well served just putting my money away, and when this thing goes and puts in a nice weekly W, I can get in there on the buy side, but until that happens, I'm just gonna cool my jets. And frankly speaking, I think that's not a bad idea. The only problem is I just don't know how long this is going to take. I mean, it might be something like this. We go up and then down and then like this and away we go. I don't know. And then, this is kind of where it gets dangerous to get into the future predicting business. Because quite literally, folks, and you're not going to like me saying this, but there's no reason why this thing can't do something like this. Right? No reason whatsoever. Seen it plenty. Well, maybe not. There's a Sjord TA. All site members would know that. In fact, actually, if this is classically the top, and I don't know whether it is. I mean, it'd be interesting to get your guys' sort of feedback on the. I did see there was a whole bunch of coins that got transferred over to the exchanges and stuff like that, and I got the impression that that's actually a pretty bearish sign, but. I don't know. Anyway, point here is, usually we call them like saucer bottoms, but usually that's the way markets like to bottom. And it might be like a big old sort of back and forth here kind of thing, like that. That could be totally realistic. And then, I told you before, if this is the top, I don't know whether it is or it isn't, but if it is, then, what do we say that a typical bear is? Whoops. Typical bear is 72 weeks, so that's right in there. 18 months. So actually that's, I guess that would make sense. That would be basically about a year from now. We actually hit our trough. And, the interesting thing is that actually corresponds well with that Brenner 22-23 kind of thinking. The only issue with that is that this would, if this scenario plays out, it would be more along the lines of the Fed actually's got religion here. The public's concern for inflation is out of control, and people are demanding that the banksters reel things in. What do you think the odds are that we're in that kind of world? Hey, I'm trying to be PMA. I'm trying to be positive. I don't think that that's our world. So I'd ironically enough, if I actually followed, another sort of simple principle that you can use is there's the bottom in the market, there's the top. Usually bear markets are about, like Mr. Gann would say, probably about 50% of the duration of that bull. And actually, it's really interesting is if you did a full cycle analysis, usually this peak comes in about 2/3 the apex of the entire cycle, right around 61.8. Not at the 50% level. You would think it would be at the 50% level. But no, it actually comes in usually around 61.8. But anyway, the point here is if we just did like sort of WD Gann and just said, okay, well, what would a healthy natural move be? All that is half of that, right? So I guess like there's 61 bars. So again, that's sort of looking for some sort of ultimate bottom there in June 22. Now the interesting thing about that is that it should be about 50% of that price range. So that means that, ironically enough, you may actually find that we go down here, put in some sort of crazy ass bottom, and then rally for like 6-8 months into the new year, into next spring. That could very easily happen. In fact, actually, that's usually how the seasonal trade goes. So don't be surprised. In actual fact, the last Bitcoin correction, that's exactly how it went, right? It was basically there was the bull run. There's about half of the bull run's duration, right? If we, let's see, we'll just see if we can, probably even really similar duration. Yeah, look at that. Yeah, it's just about right at the bottom. Remember, there was our big breakout volume buy signal. So half of that means that you should be at 50% level of this move, just about half of that duration. See, boom, 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 boom. That's pretty darn close, eh? How do we do that? We'd go like that. And I'm kind of talking out my butt here today. This is the one bad thing that I do, is I just talk way too much. So, I don't know whether you guys getting any of it. So the point here is that Mr. Gann would say that about half of this duration of the bull is probably where the market's going to be, at about half of whatever the size is. And that's basically the prediction, that price was going to be there then. That's not a bad prediction, eh? Pretty close. 50% level, 50% of that bull run. Boom. Pretty good. So I could very easily see the same thing this go round. I don't see any reason why not. Bottom of the run, top of the run. Actually, this is, I guess that was 87. That wasn't, here's another one. Let's do this one. 62, something roughly like that. 62, so somewhere in there. So, and 50% of this move. Right in there. Yeah, there we go. So, yeah, I wouldn't be surprised. What is that, 35,000? So the irony of it all is that we're probably in that sort of like next fall, I guess. Yeah, the end of next year. I kind of like this scenario, you know. The only, like I said before, though, the only thing that this is taking into account is assuming there's no more U.S. dollar dilution. But what do you think the odds of that being are? If everything was just left, just leave it alone. Quit screwing around with the money supply, you goddamn banksters. Quit getting your free ride in the bond market. I mean, that's basically what's happening here, is that basically all the banksters are getting off scot-free for floating all those bad loans. They should go bankrupt, but they're just getting a free ride. That's more of that stuff, why is Brian so bitter? Why is Brian not Mr. PMA? Well, in a real world, in an honest world, all of those people they'd be doing jail time. There would be massive lawsuits. A lot of these big banks and brokerage houses would be out of business. Ironically enough, Bitcoin would probably only be worth about $5,000 because we would have confidence in the currency system. We'd have confidence in the courts. We would have confidence that the 1% can't just go and steal our money from us. We'd have no confidence in that, so as a result, Bitcoin's like almost 5 times the price of cost of production? That's just purely a function of your guys' fear. The market's place's fear and sort of its lack of belief in the money system. Anyway, we're supposed to remain positive here, so let's try and keep positive. Okay, so there's kind of fun prediction, having fun for you. I mean, ideally, I'd love to have Willy Woo's scenario play out, 2013, 2014, but it does mean that we're running out of time here, and we got to see some buyers step up here. If you buyers don't step up here, then this thing's just going to keep drifting lower. So, all right, heading off to your questions, and we start a bit later today because it was the final episode of Grimm's liquidity events tutorial. Turn the fan on. Get a little bit of air moving in here. What are you doing? All right. Try that. Okay. ETH is an interesting one because I actually think ETH could pull like a Bitcoin this cycle. Somebody just asked, well, Brian, what do you think of ETH? So might as well do a quick boo there. See, I really like this idea that ETH, it's kind of like the computer of the internet. I wonder where the best place to look at this is. Oh, I guess do Coinbase. Keep it simple. I liked the idea that we hit 61.8. I would have liked to have seen some buyers come in here. You notice the buyers are not stepping up here, and now they've really gone quiet. So probably not much for us to do in the short term. Notice, like the big buy signal. I think you can argue, see how there was a big rising volume bar there? Probably not a bad idea to look at a weekly chart to really see, don't get sucked into the day-to-day, no. Am I breaking out? Maybe I'm not. At this point, I would stick to the weekly charts, right? I don't know. Are there any of you... Kevin, you're on the call here. Do you remember last cycle me going on? Weekly W's, weekly W's, weekly W's, weekly W's. So, anybody that survived... actually, I'm going to fill up my coffee. So somebody sing a song or something about weekly W's. I'll be right back.
Weekly W's.
Thank you. Man. Anyway. So I did like this idea that pullbacks into this support area here. We're a really interesting buy level. And of course, good old Wyckoff check. Ben, if anybody's watching, we do a crypto top 100 show on Wednesdays. And you know what I'm thinking? You know what I want to do? Leave your comments here if you'd be interested, because there are quite a few people that do this. But I think I want to, we've got about 4 or 5 names out of that Crypto Top 100 review that we really like. And I think we should create a crowd-funded mutual fund for that show. And that crowdfunding goes into buying those coins. And it's basically just a basket of those coins and like weekly W's and all that kind of stuff on those particular coins. So let me know in the comments whether you'd be interested in something like that. And I'm going to run it by the boys on Wednesday and see if they want to dig into it. But maybe we can even do it entirely through crypto or something like that. I think that would be a fantastic idea. And the names that all of us go, yeah, we really like that. Yeah, that's kind of a cool story. Yeah, that's a cool name. We be invested in those names. So at, of course, appropriate technical levels. So, yeah, I was really thinking about that. Anyway, so one of our Wednesday guys, Ben, we're trying to teach him. He's actually just a regular site member, so he hasn't even taken the school program, but we're trying to teach him this concept of Wyckoff check. So there's actually a pretty good one where the market ran up, checked it, the original breakout level, and then kept going higher. And I get the impression that that's actually what's going on now is that as the market comes down into these levels, there are lots of old buy orders sitting down here getting filled. But, of course, to get the price to come down here, we got to inject you public a lot of fear. And we got to get you selling. That's the only way these people, their buy orders are going to get filled is you, the public, have to sell. So they keep, they'll jack the price down, jack it up, and then get you all full of emotion. Oh, here we go, we're going down. And then, of course, boom, right into buy orders. Bring the market back. All right, here we go, we're going down. Boom, into buy orders, then bring it back. Like I said, for you to really know that there's a rip-roaring bull here, though, is we got to see some big green bars here from volume. And you're going to see, we're not getting that overwhelming message. So I don't think there's really any hurry here. And my hunch is, I would like for us to repeat that 13-14 scenario, but my hunch is it's probably something that looks like that. So we'll see how it goes. Only time will tell. Is there any W's here now? No. Is there any divergence? Is there any big push in buyers? Oh my God, we have to buy? No. You can see where reload zones are. So, all you little old ladies, nanny nibblers, Grimm's, what's Grimm's strategy? Planting flowers, whatever you want to call your strategy, using that little old lady risk management approach to buying. Well, you know the rule. Once we're at or below reload zones, you can start initiating that. But that's about as far as we are right now. There is no, oh my God, this thing's a rip-roaring bull. Just not there. So, let's go slowly. Alright, so let's head on over to the questions and see if we can get that taken care of. And then I'm off to Liam. So, number 1, hi Brian. I know we should not be thinking in options now in level 1, but I was wondering, why isn't there a market to trade options using BTC as base pair? Something related to BTC volatility maybe, or lack of innovation in the crypto space. Example, BTC against altcoins. I only see crypto options using stablecoin as base pairs, but I'd like to stack sats instead of fiat or stablecoins, and it would be great if I can play the options market using BTC. Thank you. Yeah, I would definitely say this is a lack of experience. There have been a couple options desks that have come and go, and of course with this insane volatility, Bitcoin $500-600, then running up to 20,000, then running back to down to 2,000-3,000. I literally watched one of these fly-by-night options exchanges totally blow themselves up, and it's gone. So, problem is, of course, in highly volatile markets, options can either make you stinking rich or they can make you stinking poor. And I can show you lots of examples of guys who were supposed to be super smart ended up destroying themselves because they took the risks of options too lightly. So, if anything, it's probably better that we don't have options in this space just yet. And at any given point in time, if you are trying to buy an option on a product, then by definition that means that there has to be somebody on the other side of that transaction action taking that appropriate risk. So if you have a coin that goes like 100x versus Bitcoin, and you have an option on it, which is I'm sure exactly what you want so you can get fucking stinking rich, well, there's got to be somebody on the other side of that trade that just got stinking poor. So I can understand why there aren't options. It's just way too risky, too volatile. And ironically enough, you'll know that the market has matured to the point where we're at sort of mass adoption when there are options on all of these things, because the options themselves will take a lot of the volatility out of price. So it was interesting this last cycle. There was a Deribit options exchange, and I remember Sebastian back in the spring showing us just some outlandish numbers that they were doing. It'd be really interesting to see how Deribit sort of bottom line fared through all of this. But very simply put, the market just is not mature enough to be able to handle options, and frankly speaking, it's probably better, because the problem with options is they can represent massive amounts of money. And then the question is, if somebody did write that legal obligation, at least if it's like something like a Finnick swap agreement that you go into, well, your account just instantly is liquidated and all of the money's moved over on that simple swap agreement when it settles. With options, you might write an option, which means open-ended liability. The market takes off. Who's going to pay that? Where do you get that money? If the guy just says, man, to hell with it, I'm not going to honor the option, what happens next? These are OTC. Remember things like CME and CBOT. Those are exchange cleared functions. The exchange actually guarantees the transaction. No way in hell you're going to find that in crypto right now, that's for sure. So my hunch is slowly but surely over time this will evolve. I think what's happening is that there's sort of like a short list of approved cryptocurrencies that will be sort of deemed institutional vehicles. Bitcoin, Ethereum right now. I'm sure Charlie's going to be in there at some point, and a whole slew of others, Richard Hart and all those kind of people, Novogratz, his Luna and all that. I get the feeling that there's going to be sort of a class of accepted sort of institutional names, and you're probably going to see options listed on all of them. And cross options, Bitcoin versus altcoins, I don't see that happening anytime soon, because who's going to honor those transactions? There's no exchange that would put their neck in the noose. That's too risky. So you might find OTC transactions, but you're in the level 1 course, so you probably remember our story about Mr. Gould. And what was it like to try and have to settle transactions in the days before exchange cleared transactions? It's a bit challenging. Okay, number 2, is there any way to skip level 2 in the program? In the last BCS, you said that level 2 is intended for day traders. However, I realize that I am more of a around 3-month type of trader. Do you think I will benefit if I enroll in level 2, even though my holding period per trade is not intraday? Thanks. Yeah, so what I would simply say is it doesn't work that way. The concepts that we use are time frame agnostic. So that means technically you could use the L Tangonator setup on a quarterly chart to frame investments in mutual funds for pension plans. On a quarterly basis, you could use that L Tangonator setup on a 3-minute chart trading crude oil futures in Chicago. So it doesn't matter. I think that probably the way that I look at it is the course is really the entire project, all sort of like 36 modules. And it's not really like there is a end of level 1, end of level 2. It's sort of like I can't really keep you for longer than about usually the industry standards is 90 days. You start going over 90 days and people start forgetting about the stuff that they learned at the beginning of the educational module, and you have to go back and sort of refresh people. I mean, that's why the school's trimester system works the way it does in universities, and actually I think really in all schools. I believe that the school itself could easily be their modules added, stuff reorganized, repositioned. It's not a finished product. It was just somebody asked me a few years ago to put this together, and so I did. And it's just sort of sat in its current state since. There's some people that love the level 2 program because it's actually a huge part of the level 2 program is actually a history lesson. So we learn about the evolution of the futures industry. We learn about the evolution of technical analysis. I mean, I actually heard somebody who was theoretically a quote-unquote expert say that Charles Henry Dow was the founder of technical analysis in North America. It's like, what? So nobody looked at a price chart before this Charles Henry Dow guy was around? That doesn't make any sense. But hey, I heard an expert the other day say, I got 20 years experience. Charles Henry Dow was the first one to do TA here in North America. It's like, whoa. So, if anything, it's probably really important that there is actually a source that kind of teaches the evolution of TA. And oh, by the way, we use Japanese candlesticks even in our level 1 program when we teach Rachel there. So, Rachel, how old are Japanese candlesticks patterns? That's going back a few years. So, a big part of the level 2 is also the juxtaposition of how people handled mountains of information back in a non-computer world. How people actually built price charts and analyzed assets over long periods of time, like W.D. Gann and point and figure charting. I would consider it's sort of like, the book I think is going to be like, 1,000, 5,000 pages, something like that, right? And what you're saying is, Brian, if I read page 1 through 1,000, and then 2,500 through 4,500, have I read the whole book? And the answer is no. I mean, you're going to have missed a huge chunk of the book. And it's not really like one section is more important than the other. In fact, I would even make the argument that the course is not really overly exhaustive in any one particular field. And I had one gentleman this last level, he was actually a little bit cursed at us because we introduced W.D. Gann over 2 full weeks, and yet this person's thirst still wasn't quenched. And I had to tell them, look, this is just an introduction. We just want to set the table for you, and if you want to take this study further, rock on. But I mean, how much can we teach you in 2 weeks? My simple answer to you is I don't think it's in your best interest to go this kind of thinking route. I hear what you're saying, but I actually think that everything is intertwined. So that's my answer there. Okay, number 3. There is an increasing number of trading bots and multiple screeners in the market. And ultimately, AI will weasel in and could dominate the trading game. Not really. Do you think the art of trading will have value? Of course. And do the rules of the setup take away the art of trading? And ultimately, a robot is all that is required for a 66% win rate. Nah, doesn't really work that way. Just remember that every algo that is written and that operates in the marketplace was actually built by a human. So really all algos is they're just an articulation of human behavior. And they can only do what the human tells them. They can't do anything more. So, you guys come to me from the computer field and from the online field, and I've worked in this industry for 30 plus years. It's really tempting, and it's really it's convenient for us to think that we're actually relatively big fish in this pond of investing and money and how the markets work, but ironically enough, actually, we are incredibly small. We are so small that there's enough room for all of these guys to run around acting. And keep in mind, like I said, just because you run an algo, man, I remember there was one guy here, Rachel, last go round, I think it was one of the Z coins, he let his bot loose, and the damn thing bid up the price of the damn altcoin to 3,000 Bitcoin for one fucking coin. And needless to say, his bot went bankrupt. So, just because there are bots, that doesn't mean they're profitable. And what I find fascinating is it's not as easy as you would think to build an algorithm that actually is profitable. It's very difficult. And a lot of these guys, they end up fighting for milliseconds. The guys that get into the high frequency trading, they compete on how close they can have their offices to the data centers so that the line of cable is shorter than their competitor. I mean, you can get into that business if you want, but frankly speaking, I hope you've seen, Rachel, buying these damn VCIM names with the shares properly rolled back and the directors all properly incentivized, and their company having no debt, and basically all this is publicly disseminated information, and we just go in there and invest, and the damn thing pops 10x. I mean, that's a hell of a lot easier way to make your living, isn't it? Seems to me it is. And yet, an algorithm could do that if it wanted to. In fact, actually, Andrew, my buddy here in Vancouver, we're going to do this plan together. You got somebody to go out on the internet and build a scraper that just scrapes all this information and just presents to him on a nice silver platter. Here are the stocks that meet the criteria. Now the question is, are you going to go and buy them? Well, that's up to you. But I can tell you, we're absolutely a minority. We are not the majority in this world. I was sitting down with dinner with actually somebody who was a really, really perfect example of the public. And at the end of the conversation, he goes to Andrew and I, he goes, well, why don't I just give you the money and you guys go and invest it? And we're like, no, that's the whole point of this, you stupid idiot. Sorry, I did, the public just wants to shut up and here's my money. And you just do whatever it is and go make money for me. That's the public. So I don't know whether you get that, what I'm saying there. But believe it or not, the public actually, they don't understand half of what we're saying here. And I don't know, haven't you noticed that in yourself, public? Rachel, I mean, have you not noticed that in yourself? You probably are going to now start having a hard time talking with the public, talking with your family, talking with even people on social media about investing, because they just don't know what the hell it is that we do. They don't get it. I don't know. I sure hope you understand that. If you're not, give it some more time. You'll see it. It's what usually happens to all of us. So no, I would disagree with this statement. There's plenty of market. There's plenty of opportunity for us to have fun. We can get along with the robots. In fact, if you do make it to the level 3 program, the module that we just did on trading with the Dom, half of their assignment is to watch the Dom and see how the behavior of the Dom changes when we hit things like Mountain Man levels. Because as soon as you hit that level, all of the algorithms start coming alive. You think Brian's the only guy who trades 61.8s? I mean, half of the algos are out there trading the same damn levels. So it's actually our job as tacticians to even anticipate them, because they're actually incredibly cliche. Does that make sense what I'm saying? Like, there are people in the marketplace that actually paint price action to get algorithms to act exactly the way that they want, because they know that the algorithm is a preset code. So if I paint a higher low and I paint it on rising volume, I can get the algos to come in and buy on moving average breakouts. And I really want to sell a shitload of stock, so I'm going to paint all this. Takes me maybe 100, 200,000 shares to make sure the whole thing looks exactly the way the algos want it to look. So boom, they get triggered, they go and buy, and I'm selling like a fucking son of a bitch into their buy orders. Does that make sense? I mean, it happens all the time. So, yeah. I would say, if anything, knowing that there are all these bots and algos out there, it should even empower you even more. You should go, fucking hey man, let's go algo hunting. I love the smell of burning algos in the morning. It smells like victory. What movie's that from? The smell of burning algos in the morning. Alright, moving on. Number 4. I've been looking into M3 Metals Corp. Oh, have you? Alright, well, let us know what you find. One of the screen companies for the Korean barbecue list. Alright. They recently released a news event preparing for trenching at Block 103 Iron Project. Alright, their president and director, Adrian Smith, PGO. He's also the director of another mining company. Yeah, you're going to find that. These guys, they are often the members of like a half a dozen different companies. And has just been appointed as advisor to say, yeah, that's pretty typical. Does what seemingly looks like a competent director with technical and good industry experience, along with emerging rumors, make you more likely to choose M3 for the trade? Well, honestly, I don't know. I've never really been one to be sort of like a name dropper type person. I suppose if I pulled up a news release and it said that Brian Beamish guy was involved in the trade, I might get bullish. But it's funny actually. There was that iMining that we did, and it was a funny story because that was a stock that when I first got in the business, the guy who was running that stock was in a silver stock that we made a pile of money on. So I happened to know him. So he did the whole name dropping and all that shit. Adrian Smith. It's a pretty generic name. It doesn't ring a bell to me. But I mean, it can't hurt. It's kind of like, if you're interested in crypto and you pulled up a name, and we often say, who are the directors? If I pulled up a cryptocurrency and the head marketing person was Dr. Craig Wright, how would you guys feel? Does that release any emotional triggering mechanisms? If I pulled up a cryptocurrency name and they said that Mike Novogratz was at the helm, how would you feel then? I think probably a little bit differently. So the point here is that, I think there's valid in understanding directors and who's sort of players in the industry. I can't hurt. When it comes to me, though, the model was rolled back stock, options to directors, so you want to make sure that you're long lower than where the directors are long. Shares for debt, so that you know that the company doesn't have any debt, and any debt that was owed, the person who was owed that debt thinks there's so much value in the company that they're willing to take the new shares of the company. Those don't really have any specific, well, you got to make sure that this guy's involved. Could be anybody, really. Is it dependent on like a name dropping sort of thing to get me interested? Not really. And actually, to be perfectly honest with you, that M3 it's kind of like stalled. I mean, it's we've had ones that have moved a hell of a lot faster and a lot harder and made us easier money. So I'm not even really that impressed with the M3 guys. I mean, they're there, and the stock meets the criteria, but fucking get off your ass and let's go, boys. And ironically enough, it's the same capitalist story as anything. We often say don't take too much risk because you don't know what's going to happen here. But when I get a situation where this is when you see this little S here, right? This is basically, and you can see they've had to do it a couple times. This is the ultimate definition of pain when it comes to shareholders, right? The stock being rolled back. So there's been a lot of pain here. So unfortunately, as a new investor, I like to see that. Where are the insiders long? That's more important to me. Where's your buddy vested from? Like this guy. Where does he own this stock? So that would be more important. Like if we came out, we did our due diligence, and we found out that this guy is actually long from like 2 or 3 cents a share, then even at 13 cents, I'd be like, whoa, I don't want to pay that. If he's long from 2 cents, I don't want to pay 13. So remember, it's just sort of getting in below where they're in. So, that would be my answer for you. I hope that makes sense. All right, bonds are the fear asset, but they are falling for more than 20 years against USD M2 money supply adjusted. And against gold too. How to explain this? How to explain this? I guess the problem here is, do we have a stable currency? And I think the answer unequivocally is no. So, should be interesting to, I suppose it probably looks fairly simple, but, go ZB. Something like that. I think those are Zibons. Zibon, bun. So, the irony of it all is that, if I understand it correctly, I probably shouldn't use this. I don't want to lose that chart. Let's maybe go over here. So ZB should be your bonds, T-bond futures. So, and this is, I guess, sort of the trap, is that bond prices, theoretically the principal is guaranteed. So the issuing government says, and this is like a 30-year, 20-year bond, whatever. I'll issue the bond, and at the end of 20, 30 years, you'll give you your money back. But in real terms, if you actually say, well, okay, so if I give you that money, and you pay it back to me in real terms, divided by the actual amount of currency that's being issued, these bonds were actually worth this up here, and the bonds are actually worth this down here. No doubt about it, folks. We are in the end game of basically about a 40, 50 year. You've heard me say this before. Pretty much my entire life, I heard people say on the election pulpit, elect me, I will endorse this spending program, even though we can't afford it. And we also heard everybody say that we are mortgaging our grandchildren's future to do all these, build our fancy aircraft carriers, build our nuclear weapons, whatever. So that's really that image. You're absolutely right. In real dollar terms, these U.S. Treasury bond investments are shit. I mean, simple as that. And the worst part about it is that there are a lot of people that, a lot of American citizens that were told to wrap themselves in the flag. Uncle Sam will take care of you in your retirement. Government pensions, work for the government. The irony of it all, work for the government, even like CIA pensions. I mean, the actual purchasing power of those pensions is laughable in comparison. I mean, I keep telling you guys, $2.50 Subway sandwich in 2000 is now $7, $8, $9. Well, that's exactly the same conversation. This is your $2.50 Subway sandwich, and this is your $8, $9 Subway sandwich. Subway sandwich doesn't change. It's just the value of the currency that's backing it is just collapsing. So, I mean, the problem here is, and, you're saying, well, Brian, you teach us that stock and equity investing is risky and that bond investing is actually the safe investment. Theoretically, yes. But in this fucked up money printer world, I would say bonds are pretty damn dangerous too. The whole thing, the whole thing is a con job. That's what's so scary about this. This is why Bitcoin has done as well as it has. The whole fucking thing is a con job. And it's a shame, because I'm supposed to be PMA, supposed to be Mr. Happy. I'm supposed to be teaching you, be a good citizen, save your money, do the right thing, pay your taxes, and, look out for your common man and all that kind of stuff. Just be good citizens and everything will take care of itself. And that's clearly a lie. So, I mean, I don't know how to explain this to you other than I believe that the people that are in power right now are dancing a very, very dangerous dance. And we might not be living with a US dollar hegemony world for a hell of a lot longer. The whole damn thing might have to collapse here before we're done. That's half the reason why you're buying Bitcoins. In past cycles, they wouldn't have a Bitcoin. They'd be buying gold and silver and be burying their head in the ground. We might have a situation where the government actually comes out. They did it last cycle in conjunction with the banking elite and actually make it illegal for you not to participate in this devaluation of your lives. It may actually be illegal for you to try and avoid what the banker's stealing money from you. That's basically what they did in the 1940s. And, I think I've told you before, my horoscope says that I'm going to do very, very well into the 30s, and then I shouldn't be in the market at all. And frankly speaking, I'm going to really try and do that because I could very easily see in like a period in the 1930s, 1940s maybe, 2030s, 2040s, 2050s, where there's actually the pendulum swings back the other way, and actually there's a big backlash against people that are quote-unquote traitors. We'll see how it goes. I'm not going to sugarcoat this. And I also said too before that what really bothers me about this is they're going to fuck with the system so much that actually classic buy low, sell high, or don't take too much risk, and we're all ants, we're responsible citizens, pay your bills, pay your taxes, be good citizens, that might go right out the window. And people are like literally looking me straight in the face going, guaranteed everything by the government. It doesn't matter what you buy, it goes up. So what's the point in even listening to you, Brian? That could very easily be the case by the time the end of this cycle happens, which, at least I'm not bullshitting you. I acknowledge that. They are really fucking with the system here. No doubt about it. And to all intents and purposes, all of these Western society, all of their bonds are completely worthless. Which means, like the guy who was the big short guy. I even heard somebody earlier today, somebody make reference to this guy. He's basically looking for hyperinflation. Because the currencies themselves are worthless. Because our system that was put in place, thanks to people like Ronald Reagan, who said that we don't have to balance budgets. And literally, since that statement by him, nobody has balanced a budget in the Western world, and now we're in this situation where nobody has any money, and we're all praying to God that this Fakezi keeps going. I mean, here's the kick in the pants, is the day the Fed and these banksters say, okay, you know what, you're right, we should be serious about money management, we're dead. The whole fucking thing's gonna tip over. Well, Clinton had a budget surplus for 1 quarter at the very peak of the dot-com boom. 1 quarter the economy grew so strongly that they actually had a budget surplus, and he was so proud of himself through that. And at the exact same time, he actually tried to make Israel and Palestine come together and make a peace agreement. Remember that? It was like the two impossibilities. I remember around the brokerage house when that happened. Everybody was like, it's impossible. Anyway. Okay, so unfortunately, I'd like to give you an answer to this other than just understand that the principal to these government bonds is guaranteed, and there is no guarantee to equity. So as a result, that's where the quote-unquote guarantee in this comes in. But that doesn't mean that the government can't issue a ton of money and make the money that you're being paid back down the road, relatively speaking, worthless. And that's in essence what's happening. And I'm sure at some point the market's going to go, what the fuck? And the whole damn thing's going to collapse. Get ready. I think that happens in the next couple of years. This is going to be messy. And, the interesting thing is, of course, we have that sort of, 300-pound elephant in the room, good old Bitcoin, and guys like Willy Woo. Guys, somebody tell me, is Willy Woo still looking for 300,000 Bitcoin? Because if he is, then that to me means that the market is actually looking for this big fucking... Okay, enough is enough, United States of America and all the Western worlds, your currencies are worthless, and we all go piling into Bitcoin. Anyone? Anybody answer that for me? Anybody watching that guy anymore? I think he, about 6 months ago, he was pretty jazzed about that. Anyway. Okay, so, you're, the Pamp. The Pamp, are you even here? Hey, there he is. I mean, does that help at all? I know you want to, well, this is the answer and do this, and offset all that, but you're absolutely right. This is a fucking shit show. Woo is permabull. Alright. Kinda, yeah. I mean, I wish I could give you a better answer, dude. Why don't we work together on this over the next little while, okay? I'm not going to say this is easy. This is a real mess what they've gone through here. All right, well, you ask another question. Let's see what we got here. So, as we are transitioning from a fear cycle to a greed cycle, should we expect that the commodity currencies, Russia, Canada, will be falling against currencies of the countries whose economies are based on well-developed businesses? Well, it's sort of like... First and foremost, the United States is still considered the economic engine of the world. So you can't deny that. It's, some people are thinking China has taken over that role. I personally don't believe. I still think China is still a command economy. I do not believe that the consumers have taken over. Interestingly enough, Chinese and the American currency is still pegged. I would say that you can believe Chinese data and you can believe that China actually is the second largest economy in the world on its own right if the Chinese currency is not pegged to the US dollar and there's a free-floating, free market, which there is not. So it's so ironic that the Americans and the Chinese, like they sort of, saber rattle when it comes to things like Taiwan. And yet the irony of it all is if the Americans really wanted to fuck them, they would just say, look, enough with this US dollar peg. We are freezing you out of the international trade settlement system. If they did that, my hunch is China would implode. But that's here nor there. Now keep in mind that, while we're in the fear cycle apex, and while we're in the greed cycle apex, you cannot see this long-term trend direction. I was there, and I remember very specifically with a good portion of my retail client base, because they didn't believe me. They were all rah-rah, .com stocks. But I was there on the ground back in 2000 here when this thing topped out. And at this point, you couldn't fucking give away a euro. You couldn't give away a Canadian dollar. You just couldn't give them away. Australian dollar, same thing. So I see currently the kind of environment now. US dollars relatively weak, relatively unfavored. Canadian dollar very uppy, way too frothy in my opinion. Even the euro, for example, I think that we're getting near some sort of pivot. I thought it was interesting. Somebody even asked me about the Swiss franc, and actually this is kind of a good dovetail. That person, maybe somebody can at them. I did up this chart of the Swiss franc, and I thought this was really interesting. I think what's happening here is we're going through a little period of consolidation in the commercials activity here, which usually is a sign that the market's going to be a little bit softer. But because we have this big structural breakdown here, I think the trend actually for this thing is still to move higher. So I'm actually thinking that Swiss franc kind of its pattern is going to look something along these lines over the next little while. What does that mean? That means sort of coming, through 2021 into 2022. Actually, that's US dollar strength. And then 2022, 2023, that's into 24, 25, that's euro strength. Swiss franc strength, gold strength, Chinese strength, especially into that Chinese, Belt and Road Initiative. But I think there's a couple years of softness here in currency land, and I think this is all predicated around what's going to happen with this U.S. dollar coming into year end here. I mean, ironically enough, this might actually even fire this huge W. This is the U.S. dollar index itself, which means that we have to start painting some pretty damn bullish upside objectives up here. So you might find that actually into the end of this year that, very much like, because I'm hearing that the viruses are starting to tick back up. I'm also hearing, too, a lot of people are getting sick that have technically been vaccinated. So if that's the case, then those people are probably doing okay. I heard that if you get vaccinated, then at least you survive. But how about all the other people around the world that are not vaccinated? Are you actually trying to tell me there's 1 billion people in China that are vaccinated right now? I don't believe it. I don't even believe a tenth of that number has been vaccinated in China. So that means that this sickness is still running around like crazy. And really, I think you have to think about, like Julian, for instance, he's in Thailand. And right now, I think they've actually gone back into, full lockdown there. How about all those poor people, all the peasants in the countryside out in those countries? Do they all get vaccines? I don't think so. How about India, right? Are they all getting vaccinated? Is this situation over yet? I don't think it's over by a long shot. So in a weird sort of way, I could actually see us have another big honking face rip out of the US dollar. And it's interesting because quite often Bitcoin actually rallies with the US dollar index. There is a conjecture out there. I know it's a crazy, outlandish thought, but this is an index. What does that mean? Well, what it means is it's actually what they call a basket of a whole bunch of different things. Could Bitcoin not be included in that basket? Why not? How about Ethereum? And they're all now futures contracts. Ooh, all serious. They even have derivatives on Deribit on them now. Like options. Maybe we find a situation where the US dollar index actually rallies and Bitcoin does its crazy ass moon rally as basically the third world becomes the third world again, and everybody's fucking dropping like flies because the Delta variant has gone absolutely haywire. But if you don't have the vaccine, it's just as if we were in the middle of last year. They're only going to concentrate on the United States, and this is also another commentary. I've said this before. This recession actually should affect a country like the United States a lot better than in 2008. 2008 was the US's punch in the nose. And the rest of the world kind of went, look at you suckers. I got a funny feeling this recession is the other way around, where the United States actually does pretty well relative to the rest of the world. Now, this hasn't broken out yet, so you can't really start thinking about these absolute insane upside objectives, but it is interesting. Like I said, somebody asked me about the Swiss franc right now, and I do not think that this is in rally mode just yet here right now. I actually think that this is actually in correction mode, and I think that, even like Swiss franc, we could go sideways to the downside for at least another year or so as this plays itself out. Then once we do go and M out and start breaking down again, and if it follows this pattern, well, then we can start going rally to the upside big time. But somebody asked me about that, and I just saw a lot of similarities to this. It kind of looks like we're sort of in the same period, like right in here. And this thing won't turn up because they're wondering, when do I go buy my Swiss francs, right? So I said that that's probably, keep in mind, this is a monthly chart. So that's like a good 6-8 months from now. Not really now. So I'm not quite sure how this Bitcoin versus US dollar situation plays out at the end of the year. You might find that the US dollar and Bitcoin rally in unison. That would not shock me, which of course is going to drive everybody crazy in the market. Then I'm not going to be able to figure that one out. Okay, blah, 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 blah. What time is it? All right, I got to get going here. So I think, if we can think 15 years out, and it's a long time, trust me. Like when I was in 2000, thinking what would the world look like at the next commodity cycle turn, I couldn't think that. My son was born in that dot-com peak, and literally now he's 20 years old. That's 20 years ago. So literally it's kind of thinking, okay, what does Liam's life look like when he's 40 years old? I don't want to think about that. That means I'm fucking over the hill and just about dead. But in essence, that's what I'm saying with this kind of analysis. Is don't think of like Canadian dollar and Australian dollar and Russian ruble collapsing tomorrow. This is what do these trends look like over the next 10, 15, 20 years. So that's sort of how I try and help you understand that. But am I bearish of Canada? Abso-fucking-lutely. There's no manufacturing in this country. It's fascinating what they're doing here. The only industry in my country right now is real estate development. I mean, what the fuck? And, the problem with that is that the only reason why real estate development is so strong is because that's been the trend. And what happens is, guy goes and develops real estate, sells it at a profit. That's the only thing he knows to do. So he goes and buys another property, develops it up, sells it at a profit. Well, it's the only thing I know how to do, so go do it again. And you can only go to the well so many times. And I look out my window and fuck, have these people gone to the well? I mean, it's ridiculous. This is exactly what's going on in Vancouver, British Columbia, Canada right now is exactly the same thing that was happening in 2007, 2008 down in the United States. It's identical. You know, credit default spreads for Canadian debt are even higher than they were for the U.S. and the Americans through the financial asset crisis. So, and of course, the real estate development, this is nuts. So it's not really a question of if, it's just really a question of when this market breaks. And when it does break, once it's broken, then it won't come back for like 20 years. It just, in fact, I don't think that actually, no, I would say that it will be probably like a 40-year cycle. Because if you think about Vancouver, and actually this is an interesting study for anybody who's like a student of the market. Vancouver was very, very popular at the 1910, 1920. That particular greed cycle apex, that was the famous one where JP Morgan had to go in and bail out the market. And it turns out he was on the payroll of the Rothschilds, so that's how he could do it. And at that point, Vancouver was in a real heyday. I get the impression that that's the same as what's going on now, the same cycle. But then there was the Second World War, and keep in mind, British Columbia. So, obviously the Brits, they didn't do so well through the Second World War. They lost quite a bit of their quote-unquote empire. So this kind of region of the world went very, very quiet for a very long period of time. And that's what I think will probably happen here, is that everybody will be thinking back, you know, once the market breaks here and then we start getting maybe 10, 15 years down the road, everybody's going to be thinking back to this heyday and sort of lamenting and waiting for that next bull, and it just never comes. So that's what I think's the fate of this place. But anyway, only time will tell. So hopefully, you know, that as a commentary on Canada, I think I see the same thing with Australia. I see the same thing with Russia. I can't really comment internally on what's going on in Russia. I did notice that I was looking at the Russian currency. It's not necessarily a buy, but it's at the point where it's an interesting apex. So if you are a Russian bull, some interesting stuff to keep an eye on there. You know, Mr. Putin's kind of behaving himself these days. I think the market kind of likes that a little better. They haven't really gone to war. Actually, what was the way I did this? I think I did it USD/RUB. Oh, no, that's not right. Yeah, Forex, there we are. So, I mean, let's hope, you know, just everybody keep your head on calmly. Don't go and fucking tip the apple cart, Mr. Putin. But I did notice... no, that must not be the way to do it. Maybe it was the other way. Yeah. So I did notice that we're at a pretty interesting inflection point. There's a monthly chart on the Russian ruble. So this might be a situation where you might find that the ruble actually bucks the overall trend. Maybe that's regular. Yeah, there we go. So interesting level. Now, unfortunately, that's not a buy signal unto itself. What's our rule about trend lines? Can we take a trade at a trend line? This is where the rubber meets the road. You want to make money from trading? Right, simple as that. So I think that you got to let the trend line be broken, but that's going to be a big event for Mr. Putin. And then our rule is, if this thing can W on the other side of this trend line, this might actually translate into a very, very big buy signal. But keep in mind, the problem here is, can you see? How's Russia done over the past 20 years? How's it gone over there? This thing was supposed to be in a bull market for the past 20 years. Ouch. So something didn't quite go right according to plan. So, and the interesting thing about this is, who can tell me, what should be the statistical percentage of the time that we should rally up and fill in this price gap? Does anybody know? Hey, look at you guys over on YouTube. Look at all you guys. Excellent, excellent work, everyone. And hopefully just the fact that I'm even like contemplating a bullish setup on the ruble hopefully leads you to believe. I mean, you know, politically, I don't really care. Like, actually, anybody over on YouTube, how do we tell if a politician's lying to us? So it doesn't matter whether they're from Russia, whether they're from China, whether they're from Washington, or you know, whether they're from Buenos Aires, whether they're from Dominican Republic. It doesn't matter. It's all exactly the same. So just understand, whenever I make reference to politicians, it's always the same. And it doesn't matter what country they're from. They're always lying to you. Right. So, hey, I'm a trader. If the market likes the ruble and the market's actually saying that this thing's a buy, well, I mean, I got to respect that. The market doesn't lie. But the interesting thing is, a lot of people don't know how to actually listen to what the hell the market's saying. And what I'm trying to tell you here, and hopefully you guys are getting this message, like Great Del Moody, I think he's doing a good job getting this across, is you can't take a trade at a trend line. This is dangerous. You could get yourself into trouble here. Let it break out, and if the darn thing W's, and actually, you know, you can even see that, you know, if Mr. Putin just can keep his nose clean, you can see there are a few very interesting price patterns going on here. Right? This could potentially turn into a huge W. I don't know. We'll see what happens. Then also you hopefully see down at the bottom we have this. So you can see there's a lot on the line here. It's fascinating. Because Mr. Putin, I think he is trying really hard to keep his nose clean. And he's trying to sort of keep the country on the straight and narrow. Well, we'll see how it goes. It's fascinating. I don't usually talk about the ruble very often. I mean, at the same time, too, am I going to invest in a Russian stock? Probably not. Because, you know, I'm the type of guy that if a company does something bad, I want to be able to at least have the right to go to court. You know, have the right for a class action suit, something like that. And in Russia, that just doesn't exist. So. Okay, so there you go. Lots of chatter about Russia and Canada. Hopefully that helps you a little bit. Number 7, Brian, can you please talk about the manipulation that occurs here? Someone running SFU setups on ES with an 8-tick. Brian, can you please talk about the manipulation that occurs here? Someone running SFU setups on ES with an 8-tick stop and 2-to-1 risk reward. Yeah, I remember I posted this in the, because you guys were doing liquidity events this morning. So what we have to learn, Rachel, is that this window here, this is what we call the New York kill zone. And a lot of traders that come to the market to make money from trading on a daily basis, especially in this summer kind of environment, they're actually only going to find enough liquidity and enough volatility to really sort of carry out their plans through this sort of opening trade window. As well, too, it's a little bit more advanced, but hopefully what you can see here is through the Asian session, they put a bottom in the market. And actually, this is exactly like the example that I have in the class module. Can you see it? So Asian kill zone, they put a bottom in the market. They even gave the Asians coming out of the Asian kill zone fairly respectable reload zone entry. You see that? Look at that. Beautiful. What do we call this one candle here, Rachel? I think you're here. Right there. I mean, geez, you can't get any more textbook than this. This is ridiculous. Anyway, can anybody help Rachel out? What one candle pattern do we see staring us in the face here? Right there. Key reversal. Yeah, that's one hell of a key reversal. So somebody obviously must have said something, or, you know, something must have changed somebody's mind. That's a pretty damn big signal right there. So there's your bottom, right? And yeah, horizontal support and resistance. There's my bottom. And like I said, that low there. Obviously the key reversal. There's a hell of a floor. So they run the market up into the European session. If I can get this on here. Well, guess I can't. I'll try and do that. And really, this is kind of like level 2, but just so you know, for the purposes of this. So they run the market up, and notice that this is into the actually London kill zone is all through here. So actually, they ran it up all the way into like 2 o'clock in the morning. Maybe a little too far, too fast. Anyway, point of the matter here is, can you see, Rachel? That reload zone. So if you wanted to buy this, I think you were probably best served to draw up your reload zones and just see if you can get some sort of dip back into here. So this level here, and of course you know who this guy is, right? He always makes money at this damn game. That guy right there. So this level here, kind of interesting. Now, remember, it's the middle of the summer. Most of the professionals are in the Hamptons. So how are they going to like generate enough activity in the market to actually get the market down into here? But also, too, keep in mind, market was running up here. So there's probably a bunch of guys that are long. So maybe they kind of force their hands. So, you can see here, this is a nice M. Up, down, up, fail. Right? Probably a lot of people have their stops just below there. Trading this thing heading up. Higher high, move your stop up. Higher high, move your stop up. Higher high, move your stop up. Blah, blah, blah. Whether I would have my stop here or not, we won't talk about that. Just general observation. So, boom. Bunch of people got liquidated here. There's probably some people that even went short here. My hunch is there's probably even people that looked at this and went, this is a bull market. That was a trap. I'm going to buy here. Heading up, right? There's a W. Right? Down, up, down, breakout. Point here is there's a lot of activity. Lots of stop loss orders. And if this was a fluid, trending market, well, it would just go zipping in one direction. But it isn't. This is a summer market. There are not that many participants, which you have to understand is very dangerous for people like you and I. Because in a low news environment, low liquidity environment, there's just not a lot of people around. The professionals that need to get filled, they're going to start pushing markets around to try and trip up stop loss levels. That's exactly what this trade is. Market was moving up. And even there's a double bottom here, right? And people were buying. And I would imagine probably a lot of people that were even long from down here moved their stop up, stop loss to just under that level. And sure enough, the traders came along, hit that level, triggered their stop loss orders. The stop loss order, they're long, turns into a sell order, so they are market selling on that event. And ironically enough, the professionals are actually buying up those stop loss orders. They buy them up, all the stop loss orders are exhausted. Which way does the market go? It goes up. Then, in a typical trade for a pit trader, I like 8 ticks of risk on the ES. It's $12.50 a point. So that equates to about $100. And in essence, that's sort of like $100 risk, $200 reward. The interesting thing is, if I did these 3 trades, let's say I was expecting to do 3 trades in a day. If I have 2 losing trades and 1 winning trade, what is my end result? Rachel, can you do math? Yeah, scratch. So that means I'm 33% accurate. Wow. And I'm a scratch trader. What happens if I'm 2/3 accurate? Now what kind of money am I talking about? Oh, so Grimm just shared with us that Mr. Wu changed his upside objective? Ah, interesting. So if I'm 2/3 accurate, and Rachel, have I told you what's the kind of number I want you to shoot for as a trader at TRI? If I can be this accurate, then I'm good to go. I can do this for a living. So in this case, let's assume that I was 2/3 accurate. And so 2 winning trades is 16 ticks. That's plus 32 ticks. But I have 1 losing trade minus 8. Well, that's not bad, right? I mean, that works out to what? Plus 24 ticks, $250 on the day. Not bad. I mean, that's if each tick is $10. They're $12.50. So in essence, we're making $400, losing $100. You're up $300. You know, roughly what you said there. That's not bad. You can make a living out of that. And what happens if you happen to be right 100% and you're just fucking killing it? Well, drinks are on you, right? Hookers and blow. I wonder what a hooker in Rachel's world looks like. That's scary. Does he wear a G-string? Do they call them hookers? Call them gigolos, right? We have to be fancy. Are gigolos more expensive than hookers? That'd be a good question. Like a real good quality male hooker, is it more expensive than a female hooker? Just trying to be an equal opportunity employer here, folks. All right, so the point of the matter here is this actually, in my opinion, is a professional day trader's life. He just knows that the market loves to go after lows, especially in a low liquidity environment, hunting stops, and it will just stop going down at that point because this was a liquidity hunt, and it'll turn around and it'll go back the other direction, often a good twice that tick range. And you can see this is a beautiful example because the guy who did this setup on this particular day looks like a fucking genius, where every time he just goes in and places his order 1 tick below the previous swing low. And you know, on this one in particular, I mean, you can see this one here, you got filled here and it's like, whoa, okay, I'm okay, woohoo. But on this one, oh my god, this would have been the tough one, right? So I'm filled, ding, 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 and then, oh, okay, and then this candle here. Oh, shit, oh, we're safe, all right, woohoo. So there's a really good example of a trader's life. You just don't know in this game. But if your plan was, and you know, on the site we call this the SFU, or we had a student who loved this setup. And this is a setup that actually I taught another gentleman on the site, Craig. He's got a cool dog named Karma. The setup, and he's pretty effective at it. He's pretty good. He practiced it enough. I also taught my level 3 TA this setup, Zach. I think he's kind of lost interest in it, but it'd be interesting to see if he still has any interest in this setup. It's a difficult setup, don't get me wrong. This is anxiety central. It's not easy. This is a professional day trader's life. But it's just a really good illustration of, and then we went after the stops. They went after the stops, got the liquidity event, market jackknifes the other direction. Then they do it again. Then we went after the stops. They got their stops filled, then took it the other direction. Then they did it again. And the worst part about this is the guy who was buying through here, he was actually right. It's just the fuckers fucked him. Because look what happened. He was right. I mean, and he probably looks at this after this and goes, those motherfucking sons of bitches. God damn it. Look how right I was. And that's the worst part about the SFU. Is that it's all about, you know, them just fucking the public. But you just got to understand this. If you want to live this life as a professional day trader, you have to respect this life. This is very normal. But I'm not going to say this is not a level 1 trade setup by any stretch of the imagination. It is not. Do you understand that, Rachel? This is not a level 1 trade setup. This is way too much anxiety for you. I hope you appreciate that. I mean, you can practice it. You want to keep practicing. You know, get 100 paper trades in there so you get to the point where you are hunting this low here and you have all your trade metric ready to go when this event happens. Awesome. We can work towards that. But people, like especially people just watching like YouTube and stuff like this, there's way too much anxiety. Way too much anxiety. And yeah, Paul J's a pretty good trader. I got a feeling that guy's going to be a hedge fund manager one of these days. And he's just like, just hit the damn level. But I hope you appreciate, Paul, you are not at the same point a lot of new people are, right? So, Paul, you are apple. Hell, fuck, Paul, you're even better than I am. So, please, not apples and oranges, dude. Apples and oranges. But, great to see, you know, Paul. You want to emulate like Paul, and I think Paul will be a leader on the site going forward. Take some time to weed these people out, but I can clearly see Paul is slowly rising to the top of the community. My hunch is, Paul, you're going to be a leader down the road here. So, okay. Hopefully that talks a little bit about that. Let's see, how are we doing on time? We're okay. All right, number 8. For somebody with no background in economics, it's difficult to grasp the concept of bonds. Why would countries want to pay me interest for lending them money? Well, I mean, to answer your question in simplest terms, quite often countries end up spending more money than they bring in revenue. And then what often happens is that we have these democratically elected governments that end up making promises to their electorates that they can't really keep without going into some serious debt. You know, in past centuries and stuff, you'd have a lot of national leaders go out and, you know, try and declare war on their neighbors because they didn't like them and they wanted glory on the battlefield. Well, that often costs a lot of money. Well, how are you going to pay for that? So, what is a bond? Well, all a bond is a loan. Simple as that. So if you wanted to raise an army and go and beat up the next door neighbors, and that army costs, you know, whether it be boots or underwear or socks or uniforms or rifles or bullets or artillery pieces or horses to drag the artillery pieces or tanks or grease that goes into greasing the wheels, the ball bearings that go into making the tracks turn, the gasoline that you got to put in the tanks, engines to make the tanks operate, etc., etc., etc. This shit costs money. How do you pay for it? Well, often countries will go into debt to pay for those. You know, like I said, 100, 200 years ago, it was all about military expansion. Very little about social infrastructure. Then the communists came along and said, hey, you know what? You should really look after the populace a little bit better. And ironically enough, I think the bankers went, hey, you know, that's not a bad idea. Then that way we can encourage the governments to borrow more money from us. We can take control of the financial system because now we control the amount of money that's in circulation because they desperately need these loans. So it's a win-win situation. Ironically enough, the bankers win both ways. They win if the communists and the socialists are elected because more debt means more financing for them. They control the money supply. They control the terms. They control the interest paid on the debt. Blah, 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 blah. They win. Conversely, you go the other direction, fascists like Hitler and stuff. Well, it's, fascists obviously are going to be a little bit controversial. They're going to need lots of military spending to go around being bullies. So we'll encourage them to spend lots of money on military and going around murdering people. It's a win-win for everybody. So the point here is that the bankers need the system to be borrowing money. That is a critical component. If the system doesn't borrow the money, doesn't need the money to be borrowed, lent, then the whole thing falls apart. And that was sort of like Abraham Lincoln. Because I believe that the powers that be wanted to destroy the United States of America. This silly anomaly should not have happened. And the 1% were just caught with their pants down playing with Napoleon in Europe and didn't realize what was going over there on in the New World. Having said that, I believe that the 1% and the banksters, they put all of the pieces in place to destroy this thing called the Union. And this one guy, this Abraham Lincoln guy, he just wouldn't cooperate. And they got all the pieces in place. They had an army down in Mexico ready to invade from the south. They had an army in Canada ready to invade from the north. They had like all the, hell, they probably even had the Russians on board to invade from the west. They had the whole system in place, and then this and the banksters at the time, they riled up the South to make them want to revolt and secede. So they had the Union on the ropes. It was all ready to collapse, and the Mr. Lincoln went, okay, we got to raise an army to try and keep the Union together, and all the banksters said, sure, we'll finance you the army at like 30% interest, and of course that's ridiculous. So that was just a no-go. And then Mr. Lincoln had this crazy idea. Well, why don't I just print the money? And I just pay the soldiers out of this printed money that the United States government is going to print. And whoa, that killed it for the Rothschilds and the 1%. He paid the Union Army. The Union Army just went and just mopped up fucking the South and just humiliated them. So then, you know, what's the true irony of history? Lincoln won. The people won. The Union won. The banksters lost. And what's the final insult? Well, we'll just go murder him. And sure enough, they say that there's a ton of links to John Wilkes Booth and the whole fucking thing in the banksters. So it's so tragic. You know, I joked in a recent video. I said, you know, you look at all this and you go, this must be hell. I mean, it must be that these Rothschilds can just keep getting away with this. That they, you know, I mean, what an insult. People go to a church in fucking Israel and you have to pay your fee in a shekel, and there are the fucking Rothschilds sitting outside the goddamn temple 2,000 years ago, screwing the people over for a percentage of the action. It doesn't end. It just doesn't change. It's so frustrating. Oh well. Anyway, so good history lesson there for you. All right, Colleen. Oh, and she's gone. What time is it? Yeah, I gotta get going here. Okay. Okay, so hopefully I talked a little bit about lending, the bonds, why bonds exist, why banksters love bonds, and they love this idea of getting governments indebted. And it just plays perfectly into their hands. Number 9, how to evaluate the real estate market? What do you use as a proxy for the real estate market? I don't know whether you've watched of late, but we do have on the site, we talk about it. In fact, I think even Kevin, oh boy, I don't know if this is broken or not. It might be. But Kevin often talks about this. Did a blog post of it recently. But we use the S&P sector ETFs. And now they've actually included a real estate ETF in the actual sector rotation modeling. So, and you can see where real estate falls in on the economic cycle here. So real estate, and it's interesting because real estate never used to be a great investment vehicle. They used to try and keep real estate prices relatively stable, like how the residential housing market, which I think on balance is a good idea. The fact that they've let the real estate market and the residential real estate market part of the broader economic landscape, I guess to a certain degree is a good thing, because they like the idea of broader ownership of assets in the economy to sort of stabilize, the asset ownership. They always say it's a good idea for citizens to actually own their houses. And actually, like 100, 200 years ago, that was like crazy. Who would own their own house? It was real estate was really it was the avenue for the very rich. So XLRE would be sort of our proxy. I was kind of hoping, let's see, can I just get a chart here? I don't know how to get a chart, so maybe I'll just go XLRE. So you can see what the real estate sector has done. Obviously, ridiculously huge bull market. And really, I guess it kind of makes sense. I mean, the question you'd have to ask yourself is, what happens after all the free money goes away? I mean, while we're in sort of free money mode right now, nobody's gonna foreclose. And if anything, the big debate is, when does this moratorium on raising rents and moratorium on people having to pay actual rent and all that, when does that end? Because as long as that ends, everybody's got a free ride, right? I mean, there's no such thing as bankruptcies. Everybody's got a free fucking ride. So, I guess that to a certain degree explains this image. And this is probably the chart that I would recommend you use. And if anything, all the stuff that we do normally, I mean, you can see all these price gaps. At some point, they will all have to be filled in, which is scary, because you can see the future here. I mean, we talk about this with Bitcoin. We talk about this, what was that, the Russian Ruble? Well, that's to the upside. Well, I mean, you can see all this, folks. I mean, don't kid yourself. At some point, all of these gaps will have to be filled in. I don't know when, but they will. And probably, too, if you do things like reload zones. And you know what this looks like? Kind of like what the Bitcoin chart looked like 6 months ago. And everybody's like, shut up, Brian. Quit. You don't have to listen to indicators. You don't have to buy W's. Just buy the market. You're guaranteed to make money. It's the exact same fucking thing. Exactly the same. And you as a professional, if you really want to last at this business, you have to go, well, great. You can go and buy and sell all you want up there, but here's where I will buy and sell. And until we get back there, I'm not doing anything. So that's, to answer your question, what I would think of real estate. And this is real estate in the United States of America. Real estate in Canada and Australia and Russia, South Africa, all the commodity countries, I wouldn't touch that shit with a 10-foot fucking pole. And I'll tell you, even right now, I'm trying very hard to buy a piece of land in Hawaii. I wonder whether Zach and I should even just cool our jets for 6 months and just let the sort of dust settle a little bit and see if we can actually get the piece of land for a little bit less. But I really like the idea of buying U.S. denominated real estate in luxury locations at a discount right now. I love that idea. I've asked people to keep an eye out down in the southeast. I asked a whole bunch of site people to actually go look at one place in particular in Georgia. I love the idea. Zach's got just an absolute incredible piece of property in Hawaii. I would love for TRI to just go and buy that piece of property out and just as an asset on the books. Unfortunately, my partners, they're not overly impressed with that idea. So I might just do it myself privately with Zach. We did float around the idea of doing it as a community. We're going to kind of do it as an NFT kind of thing, but I think unfortunately that was back in the spring when crypto was very, very frothy and people were feeling very wealthy. I don't think you crypto kids are feeling nearly as wealthy anymore, so that idea has kind of gone on the back burner. But I will say that we asked Sebastian to work away on an NFT for us, and I'm just going to leave it up to the market. If Sebastian can do that, we wanted to do this piece of property in Hawaii as a not-for-profit, but I don't really care. All I care is I just want to own that U.S. Real estate. I love U.S. real estate down in here. And good quality real estate. Don't get me wrong. I'm not talking like, going and buying like ghetto property. I'm talking about like, higher end property. So, the way I would look at this is really, you want to use something like this as an index. What you want to wait for is something like this. And keep in mind, this comes along. So you want to wait for the correction, and you can see your reload zone, right? Just grab this chart. In fact, I'll even just throw it in your document. You're obviously going to have to keep dragging the reload zone up if we keep making new highs, but just like the Bitcoin chart, at some point this thing will top out and it'll start working its way back down, and I would do exactly the same thing here. No difference. Alright, so there you go. Merry Christmas. Okay, looks like we're just about done here, and actually I should head out here pretty soon. So, after completing level 1 and 2, what are your expectations for student entering level 3? Obviously, they would have to have a solid understanding of the previous material, but are there any measure packs and number of trades completed, win-loss ratio that you think is needed to excel in level 3? Just trying to get an idea of what preparation is needed to get the most out of our classes. Thanks, and keep being awesome. Oh, thank you. No, I don't really put expectations on people. As I sort of explained for this person up above, you're not really buying the full education program unless you actually do all 3 modules. Because even like 2 or 3 modules in the level 3 program, we actually go back to level 1 concepts. Like last week we did sector rotation, which ironically enough is all this talk that I was just having with you. And we explain how you build these studies and what's sort of the relevance and all that kind of stuff. And we do that in the level 3, just because we just don't have enough time in the level 1 to go back. Like this past week we did a lot of introduction to trading with the DOM, which actually dovetails nicely into what Daniele and Kiran are doing in the level 2 program. And then their battle stations, the day trading program. So it's all sort of intertwined. And if anything, what I would suggest, the best way to approach this is, if you can buy all 3 programs for that discounted price and just get it done. I would actually argue that you don't know a job until you've actually done it for 1 full year. And I would sort of argue that the level 1, 2, and 3 should take you about a year to do. And if you're concentrating and you're working diligently, you should, through that entire 1 year, be able to get up to those 100 paper trades. Get up to the 20 paper, 20 1/10 account size, and you're now live trading. You should be able to pass Kiran and Daniele's combine by time you finish that 1 year education program. So that's probably the way that I would say it is, for the people that wanted to just learn, okay, what the hell's a trading plan? How do I set myself up to a little old lady and just get going and act like a professional? That's what the level 1's all about. Eating your vegetables, teaching you a range setup, teaching you a trend setup, and, spreadsheets, logging, tracking, journals, diaries, how am I feeling, emotional acknowledgement, etc. Level 2 is kind of like, okay, we're adding more candy store items, a whole bunch of really cool different ways to look at price action. You're continually working on your trading plan, your setups, your fine tuning, you're watching how markets act given during different times of year. Hopefully you've been around the site long enough that you've enjoyed a nice little seasonal window and you see how seasonal trades work. So you've got a couple bucks in your pocket and you're just progressing along. And I the purpose of the education program in my eyes is more to just give you a nice full robust education of the market, things like history of the futures industry, TA going back hundreds of years, different market participants, WD Gann, Mr. Wyckoff, all those kind of people. Mr. Gould, I suppose, for that matter. We got to get to know him. And sadly, Mr. Granville. I think exact same thing if you're super bearish of the U.S. stock market here. It's exactly the same thing as Mr. Granville in 1980. So that's an excellent history lesson for you. And there are those history lessons throughout the course. I mean, it's not really like just one part we stop and then, in the level 3 course, of course, we go into harmonics. I mean, sometimes when I go into that module, I'll lose students just because they love harmonics and they don't even give a shit about options. And I was even in with him this morning, and Igor's just fucking banging out the killer fucking trades. Oh, and by the way, Igor's starting to turn bullish again, folks. So I would strongly suggest you temper your bearish enthusiasm. I thought this was so cool. This morning I go in, like first thing on a Sunday morning, and look at what these sons of bitches are doing. Look at all these goddamn setups. Igor's like just posting away. These guys are beautiful watching them at work. It's just, oh my God. In fact, actually, yeah, they were talking about this Unfi this morning, man. Look at that. It's just so textbook perfect. I mean, just beautiful. Just so beautiful. Igor, I'm so proud of you. And Steven. Steven's a boss. I love Steven. You guys are the best. So, I mean, the thing is that TRI is so robust that you can't really say that, okay, well, you've done the level 1, you're done. Or you've done the level 2, you're done. I would look at the whole damn thing as your education. I mean, it's not really, just get it done. And then, once you got everything done, then you can go, okay, I think I got a pretty good handle on all of this shit. Now, let's start to get serious about this particular approach to the market. I like this one the best. Or something along those lines. So I hope that helps answer your question. And also, too, think of level 3 as you finally made it to working with the old man. So that's the carrot at the end of the stick. You put up with listening to the lectures and all that, and then you finally get in with Brian. And Brian, I mean, do we have any current level 3s in this class or on YouTube? Anybody comment? I mean, we're having kind of a lot of fun this term, eh? Kind of had a weird day yesterday, but on balance, I think the current level 3ers and I, we're having a pretty good time. So, I don't know. And really, what I really like, what do you have to have in preparation? You're given everything in the level 1 program. Then in the level 3, we're going to add and we're going to refine. So we're going to do things like day trader checklists and stuff like that. Really refine your process. So if anything, what I really want you to do is I want you, in level 1 to learn about spreadsheets and journals and diaries and stuff, and just work as hard as you can through that. Then when you get to the level 3, we come back and we go, okay, let's see how we did on all this shit. Okay, where do we need work? What are we letting slip? That kind of stuff. Hey, there's Simeon's like, it's awesome, guys. All right. Anyway, Simeon was my guinea pig through the options tutorial. Remember that? Simeon and I sitting at the kitchen table talking about real estate. So, I don't know whether that answers your question. I wouldn't say that it's like one and done. I would say the whole 3, and really, I hate to say it, I think I could easily do a level 4. But if I was going to do that, I think I might just take the options entirely out of level 3 add a few more modules to the level 3, more sort of TA stuff, and then just do options specifically in level 4. And I know, for instance, people are just like, one person in particular is like, I want put credit spreads. I want put get credit spreads. And I'm like, I don't want to do spreads with you guys. So, hey, BP over here says, yep, level 3 is awesome. Anyway, okay, so is the education program done? No, I can easily add another, at least a half a dozen modules, easily. But my feedback for you is I would consider the whole thing as one education program. And as I told the person earlier, it's not so much it's like, at the end of level 1, that's it. There is no real sort of demarcator between level 1, level 2, and level 3. It's really all blended together. Think of it as just like one big book. The problem is I just can't get you to sign up for a 1-year program. That'll just drive you guys crazy. Or me crazy. One of the two. I got to give you guys abilities to, like if anything, some people after the level 1, they're like, oh fuck, I got to take a break. Just there's just so much. I need like a term just to absorb it all. And then come back 3 months later and pick up. And really that, if there was going to be a break, that's probably what I would suggest you do. It's just that it's just information overload and you can't handle it. All right, so hopefully that helps answer that question. All right, so it is 1:30 here. It looks like we're at the end of this questions. I'm not quite sure what this was, so I think we'll leave it at that. Hopefully I helped sort of dovetail what was talked about in class today, and you guys enjoyed the program. This is our review week coming up here, so ask lots and lots of questions, and let's get ready, everybody. Let's all go kick ass, and I'm still waiting for that perfect exam. I have not ever given out a 100% exam back. So, are we going to have our first perfect exam this term? Maybe. We'll see how it goes. But make sure to ask lots of questions. We got lots of office hours coming up. We got, of course, another week of review. And let's just make darn sure that we get our money's worth from your investment in us. So, okay, I think I'm going to leave it at that for today, guys. Thank you so much for your participation, everybody. PMA for the win. Hopefully you didn't feel as though I was too negative here today. Do appreciate that I do have a bit of a responsibility to try and curtail being a total buffoon. And also, too, I do appreciate that my attitude does greatly affect how others act on the site. So I do have a fiduciary responsibility to try and act like an adult around here. Let's all just try and remember, we're all in this together. 1 + 1 = 3. The more we work together, especially on the website, the more we work together, the better, we find better trade ideas. We're more informed. Thank you so much for everybody who has made a referral to TRI. I do respect that you making a referral to TRI is actually putting yourself in an awkward position if I come across like an idiot. So my apologies to anybody who's actually made a referral to TRI and that person's been like, I don't know, this Beamish guy is kind of a whack job. I think the information that we do teach here at TRI is incredibly valuable. And if anything, because the world's kind of acting a little silly right now, it's hard to see that value because, things like, banks are just saying, hey, you can have all the free money you want. People don't have to pay their bills. I don't know how the future is going to hold. I will tell you, I'm a big believer in neither a debtor nor a lender be. If you can get yourself into that kind of situation, it's the best. Where you just don't be part of this system. So that's ultimately where I want to get all of you. And I do understand that I have a bit of a responsibility to try and act a little bit more adult here. So my promise to you is I'll make a sincere effort to quit saying fuck, shit, bullshit, cocksucking sons of bitches as often as I do. So there you go. Have yourselves a great day. Thank you so much. Look at all you guys wishing me luck with Liam. That is so fucking cool. Because you know what that means? That means all of you are sitting out there in the world and you all karmically all thought, okay, Brian, good luck with Liam. Can you imagine that kind of karmic energy? That is so fucking cool. Like, you know, you kind of think, you know, like when, you know, like Star Wars, the Death Star, when they charge it up, right, and all the points of electricity all focus it, and then it focuses the beam at, what's the planet that they blow up? Andoran or something like that. Think of it this way, that, like, all of a sudden, just all of you around the world, all of you just went simultaneously, good luck, Brian. I mean, that's, and like you thought, Liam, that is so awesome. That makes my heart sing. So thank you all. I really appreciate that. All right. Why don't you guys have yourselves a great day? Thank you so much, everybody, for help. And, of course, you know, we'll keep banging away. We've got great Crypto Top 100 show on Wednesdays that I think is being well received. So check that out. And like I said, I love the idea of creating like a little mutual fund off of those top picks. And you know, boys, if you're watching this, look into that. Let's get serious about this, Nick, Derek, Ben. I'm serious about this. We could do it as a crowd-funded, you know, GoFundMe or something like that. Totally outside sourced. So I love that. We've got, you know, the daily brief recaps, kind of a fun 10-20 minutes with Brian in the mornings. And, of course, we have the daily briefs Monday to Friday. We've got Julian on for the baby powder report on Thursdays. We've got Sjord. And literally, Sjord wants to actually turn Mondays into nothing more than just an algorithm and screener show. So, man, we got a lot of stuff on the go here at TRI. And, of course, we do have another school term coming up. Bear with me. I might be a little bit chilly over the next couple months. Once this current school term is done, I will be taking a couple weeks off. Everybody needs a break. But, you know, come the end of August, early September, we'll probably go back into, like, the raffles and stuff like that. So just keep your eyes out for all that kind of stuff, too. Okay, have yourselves a great day, everybody. PMA for the win. All the best, and bye for now.